Hey everyone, welcome back to the channel. So in this video we're going to be covering 9-cent HEX. Now what? If you enjoy this kind of quantitative technical hybrid analysis on the HEX chart, leave a thumbs up, be subscribed by the end of the video, and let's talk about 9-penny HEX and what this means. Alright, this series is basically a meme at this point. The now what? Because everyone knows how to add a penny to 7 cents, to 8 cents, to 9 cents. So we are not too far from, for the first time, closing or having a candle blast through this 10-cent level. It's a big deal in my opinion, right? And that's not to say it's like resistance or anything like that. Like you've seen our targets, they're actually not super clean. They're 11, 12, they're not like flush on the 10-cent level. But it's a psychological level that's significant because it means that each hex reached parity with a dime, a US dime on the dollar. So it's a big deal. I think it's a big milestone. I think even Richard said he would light the candles at 10 cents. I personally would rather light it at $1, but hey, 10 cents means, what does it mean? Like 2000x from the bottom or something like that? Very cool. So, a few things I want to talk about in this video. Like, we've already covered what our targets are. 11, 12 cents on the technical side, right? For those of you who are new, we'll just go ahead and refresh. If you're familiar with this projection, feel free to skip. But it's pretty simple, okay? You have your pole. And then you have your triangle formation. And again, I've talked about, you could consider this to have been a falling wedge, which you could have plotted in multiple ways. Right? But once we broke the top of it, it's effectively a target of around 11.5 cents. If you considered this to be more so of a flat top formation, so something more like this, then our target is slightly higher. Not by much, but it assumes a slightly higher point of resistance, point of breakout, and takes you all the way up to around 11.9 or 12 cents. So 11.5 to 12 cents is our technical target. And once again, feel free to skip this if you're familiar with the projection, but we know that historically speaking, HEX likes to double its technical targets. We've seen it twice. Once again, the ascending triangle of October 2020, September, October 2020, and the bull flag right here from early March all the way into early May of 2021. Technical target being 3 cents, of which we doubled. So, if we were to double our technical targets, we would be reaching 22 to 23 cents, right? And so currently HEX is sitting at 9.26 cents. If you go over to nomics.com, you see that we are only about a 10% move away from flipping BNB. I cannot wait for that tweet. I'm like super excited to just tweet that. So super cool. I remember tweeting back in the day, 11-cent HEX would put us at top 3. And if you look now, things really haven't changed, right? Like a 20% move would put us in the top 3 spot. We would be flipping Tether here on nomics.com. And in yesterday's video, we talked a lot about the discrepancies in supply across Etherscan, TradingView, other websites, and like why maybe a lot of us, including myself, think it's kind of bullshit that just Nomics is the only one that counts what I'd consider to be the correct supply, because this is verifiable on Etherscan. So it is what it is, but at the end of the day, we know what's real, right? And at the end of the day, really, market cap doesn't matter as much in terms of, like the only thing it really matters for is the societal layer, in my opinion, where people look at it and they FOMO and they're like, oh my gosh, top this coin. Oh my gosh, big number, money at big number because number go bigger. Like, I don't know what the actual, or that's my theory, right? My thesis is basically that market cap matters on the societal layer because people use it as a kind of metric for FOMO, for measuring just leadership in these crypto markets. And I was actually in the I think it was a Pulse Chain Telegram chat group yesterday, and there's a great conversation going on. I just listen in the background sometimes, so excuse me if I don't hop in, but they're having a great conversation on this idea that market cap was traditionally used effectively in traditional finance, is what I'm trying to say. And earnings per share was reflected via market cap in one way or another. Now, I'm not too familiar. I don't claim to be an expert in traditional finance, legacy finance, but their argument was essentially, and that's why I hop in that chat, right, to learn things, because I don't know everything. And they were talking about that and saying how we need a new metric, or it would be useful to have a different metric via which you could, rank your coins other than market cap, something a little more unique to crypto, because at the end of the day, market cap can be slightly manipulatable. Is that a word? Manipulatable via just simple things like a lot of supply and, wash trading and stuff. So, I mean, it is what it is, but for now, we know that what really, really matters is ROI on price, right? That's what actually fills your orders. That's what actually makes it to the bank, so to speak. This is what, at the end of the day, this is what actually matters the most in terms of direct results changing your life. Market cap, more of a marketing vanity metric, as you guys like to call it. So one more thing I wanted to talk about was the lookintohex.com website, which I actually updated super late last night. I was updating these top two charts, right? The bottom two here are exactly the same, but if you go into, say, the regression rainbow, if you go into the regression rainbow category, so that's pretty much the same thing, except we removed the linear model. And the reason for that is probably super obvious. It's the fact that if you go ahead and look at a linear chart, you can't really see what's going on. Like it looks something like this, and sure, it's impressive, but at the end of the day, this website leans more towards the analytical side. My demographics probably super nerdy, so being able to actually read the data, I think, is important. And with the linear one, where it just looks like an exponential curve on a linear chart, which that's what it is, it was messy, and it was hard to see exactly the history, and then you couldn't go too far in time because price would just shoot up too much, and then it would flatten out the previous history. So it was just kind of a messy scale to look at, to be completely honest. And let me know if you want it back. I'll put it back, but I was finding it would take the page slightly longer to render, and I don't know. So you want your page to render fast, because sometimes people click on a website and it's not rendering, so they'll just leave the website. That's one of the things when you're building a website, you have to think about your bounce back rate from the site just not loading quickly. So we removed the linear scale on both equidistant as well as the Fibonacci based model. So now we just have our log scale and our normalized scale. So, and I still haven't refit the data, right? That's still incoming. And I actually had another question for you guys, which let's see what you think. Okay. So the question is, should I include the December 4th through December 14th data from the adoption amplifier to create a sort of price for HEX? Because the data we've used on all of our models, and I'm saying all of our models, so if we were to change this, all models would change slightly, maybe more accurately so, which is why I'm asking you. So my question here is, let me just show you, right? I'll just show you straight up. If you go to my master sheet, you see that I'm just using data from pretty much Uniswap when HEX launched on the open market, and it even skips a few days here. So it really starts at December 17th, really. So my question here is, should I use the adoption amplifier ratios of HEX to ETH, look at the average ETH price on those days, divide the amount of HEX that was printed to divide the amount of HEX that was printed by the Ethereum that entered, using the price of Ethereum on that day to get an effective HEX price for December 4th all the way to December 14, 15, 16, and then create some space here to actually start our data from launch, literal launch, because I believe the Uniswap market, like I said, didn't actually open until a couple weeks after launch, which makes sense, right? It just makes sense if you are a founder who wants to bootstrap your market with liquidity, but you have to raise funds first. So first 14 days, you raise some funds, boom, bootstrap the market, get it going, continue raising funds. Absolutely genius. I don't know if that's what happened, but hey, that's just my guess. So that's my question. I think it'd be cool. It would take a little bit of work, but I think it's worth it to get actual price data starting December 4th and have continuous, not a jump here, because this has honestly been kind of a pain in the ass starting from December 14th, because then it doesn't reflect the actual day. Like, I think we're on day 560 or something, but it doesn't reflect it on, say, these charts. We're a little behind on here. If you look at right now, it says we're on 548, for example. So clearly behind by the number of days that we could fill in if we did something like that. So let me know what you guys think about that. One more thing that I changed on the website was our heat maps page. So where is it? Here you go. If you look at the heat maps, it used to be our 100-day, 200-day, and 300-day. But then I remember every single video I would say I'm super biased towards the 100-day. Not even biased, but rather I preferred it because it just has more data. And as an analyst, I couldn't get over the fact that the other models just had such little data to work with, like such limited data. And I just couldn't bring myself, right? For a statistical model, you want as much data as possible. So it didn't first of all, it didn't look good. It didn't say much, to be completely real. Like if you look at our heat maps without the color code and look at the actual, height of these levels, and again, you see that we didn't have data for the 200 or 300-day until here. And so once we got to these levels, since I hadn't normalized it to like a 0 to 1 scale, I'll explain what that means later, we were getting these really overheated regions here just because these are the highest levels we've seen on this metric, but that's because this metric didn't exist until recently. I hope that makes sense. But I found that this pink curve, being the 100-day heat map, gives you a lot more data because it includes this huge peak we had back here, which was a big deal, right? So to completely ignore the data from before here, I mean, it didn't sit well with me. And so what I did is I actually removed the 200 and the 300-day. I just left the 100-day moving average weekly percent change heat map. This triangle is just a Greek delta. It just means change, right? So percent change on any given week of this curve, the 100-day moving average, and then color coding according to that. And what we did is we actually include now the quantitative interactive version of this. So when you look at this peak here, that corresponds to this risk level of 1, right? And we normalized it to just be between 0 and 1, where 1 corresponds to this highest point we've ever had, and 0 down here corresponds to the lowest point we've ever had over here in terms of risk. So in terms of the slope of the 100-day moving average. If that all goes beyond your head, all that really matters is that when this starts getting blue, purple, pink, then things are getting pretty overheated. It means this is probably shooting up all the way over here, which means the slope of the 100-day is moving up very, very quickly. Let's show you guys real quick. 100-day. So it means the slope of this is moving up much, much more quickly than usual, starting to go vertical, and it probably means price is pulling it, which means price is probably at that point moving up very, very quickly. So you can tell here, for example, the slope of this is not nearly as steep as it was getting over here, which again, it reflects that what we're seeing in the charts, right? Like this slope, the best time we could find something that kind of matched the slope was kind of over here, sort of right before this major pump. And you can see that here right before this major pump, we're at similar levels of risk, we're calling it, right? Around the 0.3 something level. Currently we're sitting around 0.37 in terms of risk. And this used to be between like negative something and point something, but I did a simple normalization, which pretty much means if you have a range of data from here to here, you scale it accordingly. So all I did was shift it upwards a little bit and then stretch it every single data point to fit between 0 and 1. And that's not to say that this pink curve can't shoot above the 1 level or shoot below the 0 level, right? Because this data has been normalized to only what we've seen. And so if we see something different in the future, we see slopes higher than this, right? If slope starts doing something absolutely insane and becomes much steeper than we've ever seen before, well, it can't go backwards in time, right? But if it starts becoming much more steeper than what we saw over here, then these pink levels would blast above the 1, right? And if it blasted above the 1, then once we reached a peak in the future, right, in retrospect, we would be able to look at that peak and scale to that peak as opposed to this peak. So this is constantly going to be updated, and you have to keep in mind that HEX is such a new coin that this is a work in progress, and these models will be updated over time. None of this is solidified. Even our regression rainbow, we've talked about the fact that over time, it'll probably start bending over and not just be a straight exponential rainbow. At some point, it's likely that will actually break beneath the red and then start forming market structure beneath it. But again, we don't know if that's in a year from now or 6 months from now or when that is. But if you look at Ethereum, I did this quick little calculation on Ethereum, and it looked like it held its exponential regression for about the first 3 years. And so that's very promising, given HEX has outperformed Ethereum on our HEX ETH chart and multiple metrics. And the fact that HEX is only 1.5 years old, it gives me confidence in the validity of this rainbow for the next at least a year or so, year and a half. And so I think it's cool having this side up for that long. Reflecting this could be very, very useful. And so if we look at our Fibonacci space exponential fit, we see that we bounced super nicely. First of all, the red back here to the yellow, so clean. Consolidation around the orange, and we're heading up to the yellow like a T, following our fractal that we discussed. And if it keeps going, again, purple is not out of the cards, which would be absolutely insane. Currently, purple is sitting at around, in the high 30 cents right now. So that's the video. Updated at lookinhex.com. Go ahead and check it out. Updated every single day. Turn on the bell for post notifications because we also drop videos every single day. Subscribe. Get us to 2,600 subscribers. We're almost there. Thank you guys so much. Leave a like on the video if you enjoy this kind of quantitative hybrid technical analysis on the HEX charts. Congratulations on 9 penny HEX. That's huge. I can't wait to do our next video. Hopefully it's 10 penny HEX. Now what? That'd be a milestone. Appreciate you for watching, and I'll catch you in the next video. Peace.